Welcome to Bitcoin Deep Dive, the podcast where we explore cryptocurrency from every angle. I'm Alex, your host and an experienced Bitcoin educator. Today, I'm thrilled to welcome three incredible guests who will help us understand Bitcoin from different perspectives. We have Maya, who's new to Bitcoin and brings fresh questions. Jordan, our technical expert with deep blockchain knowledge. And Sam, a long-term Bitcoin user with real-world experience. Welcome, everyone.
Thanks, Alex. I'm really excited to be here and learn from everyone. I keep hearing about Bitcoin everywhere, but I have to admit, I still don't really understand what makes it so special compared to regular money. Can we start with the basics and then dive deeper into the technical side with Jordan?
Absolutely, Maya. That's a great starting point. At its core, Bitcoin is a digital currency, but it's much more than that. It's a decentralized payment network that allows people to send value to each other without needing banks or middlemen. It was created in 2009 by an anonymous person or group known as Satoshi Nakamoto. Sam, you've been around since the early days. What was your first impression when you discovered Bitcoin?
Thanks, Alex. When I first heard about Bitcoin back in 2012, I was skeptical, like most people. But what caught my attention was the idea of having complete control over my money. I remember thinking, this could change everything. At the time, it was mostly tech enthusiasts and libertarians, but the core principles of decentralization and financial sovereignty really resonated with me.
That's fascinating, Sam. So it was really about the philosophy behind it. But Jordan, from a technical perspective, what makes Bitcoin so revolutionary compared to previous attempts at digital cash?
Great question, Maya. The breakthrough was solving the double spending problem without a central authority. Previous digital cash systems required a trusted third party to prevent someone from spending the same money twice. Bitcoin's innovation was using cryptographic proof and a distributed consensus mechanism, what we now call the blockchain, to achieve this trustlessness. It's essentially a distributed timestamp server that everyone can verify.
That's a perfect technical explanation, Jordan. So to bring it back to Maya's original question about why Bitcoin matters, it's this combination of technical innovation and philosophical principles. The decentralization means no single entity can control it, the fixed supply makes it scarce like gold, and the open nature means anyone can participate. Sam, how have you seen these principles play out in real-world usage over the years?
I've seen Bitcoin evolve from something you could only use to buy pizza online to a legitimate financial asset. Early on, I used it for international remittances to family abroad. The fees were minimal compared to traditional wire transfers. More recently, I've used it as a store of value during periods of high inflation. The borderless nature has been particularly valuable for people in countries with unstable currencies or capital controls.
That's really interesting, Sam. So it's not just about investment, there are practical uses too. Jordan, can you walk us through how the blockchain technology actually works? I've heard terms like mining and consensus mechanisms, but I want to understand the process step by step. Jordan, this is where your expertise really shines. Could you explain the blockchain process in a way that's accessible but still technically accurate? Maybe start with what happens when someone sends Bitcoin.
Absolutely, Alex. Let me break it down. When you send Bitcoin, you create a transaction that gets broadcast to the network. This transaction includes the sender's address, receiver's address, amount, and a digital signature proving you own the Bitcoin. The network nodes then validate this transaction using complex cryptography to ensure it's legitimate. Validated transactions get grouped into blocks. This is where mining comes in. Miners compete to solve a cryptographic puzzle that requires massive computational power. The first miner to solve it gets to add the block to the blockchain and receives newly minted Bitcoin as a reward. This process, called proof of work, makes it extremely expensive to attack the network while simultaneously distributing new coins fairly. So the mining process is what secures the network and creates new Bitcoin. But I've heard concerns about the energy consumption. Jordan, how does that work, and is it really as wasteful as some people say?
That's an important point, Maya. The energy consumption is a feature, not a bug. It's what makes the network secure. Think of it like the cost of running a massive decentralized bank vault. However, the narrative around energy waste is often misleading. A significant portion of mining uses renewable energy, particularly stranded energy that would otherwise go unused. Plus, when you compare Bitcoin's energy use to traditional banking systems, the comparison becomes more nuanced.
I'd add that from a practical perspective, the security provided by that energy expenditure has proven incredibly valuable. I've never had to worry about my Bitcoin being stolen from the network itself. The security concerns are always at the user level, like protecting your private keys. The network itself has been running flawlessly for over a decade. That makes sense about the security trade-off. But going back to the monetary properties, Jordan mentioned new Bitcoin being created through mining. How does that work with the total supply? I've heard there's a limit to how many Bitcoin can exist.
Excellent question, Maya. This is one of Bitcoin's most important features. There's a hard cap of 21 million Bitcoin that will ever exist. The mining reward halves approximately every 4 years in an event called halving. This creates a predictable, decreasing issuance schedule that mimics the extraction of a scarce resource like gold. Sam, you lived through several halvings. What impact have you seen on the ecosystem?
Each halving creates interesting market dynamics. The reduced supply issuance often leads to increased attention and price discovery. But more importantly, it reinforces Bitcoin's scarcity narrative. Unlike traditional currencies that can be printed endlessly, Bitcoin's supply schedule is completely predictable and transparent. This predictability is incredibly valuable for long-term planning and investment. From a technical perspective, the halving mechanism is beautifully simple yet profound. It's hard-coded into Bitcoin's protocol and can't be changed without overwhelming consensus from the network. This creates what economists call monetary hardness, a property that makes Bitcoin resistant to inflation and manipulation in a way no fiat currency can match. So the fixed supply makes it deflationary by design. But if it's scarce, how do people actually get Bitcoin today? What are the different ways someone like me could acquire it, and what should beginners be aware of?
That's a crucial practical question, Maya. There are several pathways. The most common is through regulated exchanges like Coinbase or Kraken, where you can buy Bitcoin with traditional currency. Then there's peer-to-peer trading, Bitcoin ATMs, and even earning it through services or work. Sam, from your experience, what approach would you recommend for someone just starting out?
For beginners, I always recommend starting with a reputable exchange. They handle the technical complexity and provide insurance. But the most important lesson is about self-custody. Once you buy Bitcoin, you should move it to your own wallet. This is where the not your keys, not your coins principle comes in. Start small, learn how to secure your keys properly, and only invest what you can afford to lose.
I'd emphasize the security aspect Sam mentioned. The Bitcoin network itself is incredibly secure, but user security is paramount. This means using hardware wallets for significant amounts, enabling multi-signature setups, and understanding proper backup procedures. The learning curve can be steep, but it's essential for true financial sovereignty. That security aspect is really important. I've heard horror stories about people losing access to their Bitcoin. Sam, what are the most common mistakes you've seen people make, and what's the best way to avoid them?
Security is definitely the area where most mistakes happen. Jordan, from a technical standpoint, what are the key security principles people should understand? And Sam, maybe you could share some real-world examples of security practices that have worked well for you.
The fundamental concept is understanding public key cryptography. Your Bitcoin address is public, like an email address, but your private key is like the password. If someone gets your private key, they control your Bitcoin. The key principles are never store private keys digitally in plain text, use hardware wallets for cold storage, and always test recovery procedures with small amounts first.
I'll add some practical tips. Use a passphrase with your hardware wallet. It creates a hidden wallet that's protected even if someone gets your device. Store your seed phrase on metal, not paper, and practice the 3-2-1 backup rule. 3 copies on 2 different media with 1 offsite. I learned these lessons the hard way early on, but they've served me well for years.
Those are really helpful security tips. Shifting gears a bit, beyond just storing value, what about actually using Bitcoin? Sam, you mentioned using it for remittances earlier. What other practical applications have you found, and how has the usability evolved over time? That's an important evolution to discuss. While Bitcoin started as peer-to-peer electronic cash, its primary use case has shifted towards store of value, similar to digital gold. However, there are still many practical applications. Sam, could you share more about your experiences with Bitcoin for payments and other uses? And Jordan, maybe you could explain how technologies like the Lightning Network are addressing scalability for everyday transactions.
The usability has improved dramatically. Early on, transactions could take hours and fees were unpredictable. Now with SegWit and better wallet software, it's much smoother. I still use Bitcoin for larger international transfers. It's faster and cheaper than banks. For smaller daily transactions, I use Lightning Network, which is instant and nearly free. The ecosystem has really matured in terms of user experience.
The Lightning Network is a second-layer solution that enables instant, low-cost transactions by creating payment channels off-chain. It's like having multiple tabs open at a bar. You settle the final bill on the main blockchain, but all the individual drinks are tracked off-chain. This solves Bitcoin's scalability challenge while maintaining the security of the base layer. We're seeing rapid adoption, with major companies starting to integrate Lightning payment.
That's fascinating. So there are different layers for different use cases. But what about Bitcoin's impact beyond just individual usage? I've heard about countries adopting Bitcoin and large institutions getting involved. Alex, could you talk about the broader economic and global implications?
That's a perfect segue to the bigger picture. The global impact of Bitcoin is profound and multifaceted. We're seeing countries like El Salvador adopt it as legal tender, providing financial inclusion for their populations. Major corporations are adding Bitcoin to their balance sheets as a treasury asset. And perhaps most importantly, Bitcoin offers an escape hatch for people in countries experiencing hyperinflation or capital controls. Sam, you witness this evolution. What stands out to you?
The institutional adoption has been the biggest shift. When companies like MicroStrategy and Tesla started adding Bitcoin to their balance sheets, it legitimized Bitcoin as a corporate treasury asset. But what's even more meaningful is seeing how Bitcoin helps ordinary people in countries like Venezuela, Nigeria, and Turkey preserve their wealth when their local currencies collapse. That's where Bitcoin's true value proposition shines. From a technical perspective, this global adoption creates network effects that strengthen Bitcoin's security and utility. More users means more nodes, more miners, and more developers working on improvements. We're also seeing interesting developments like Bitcoin-based decentralized finance and tokenization protocols building on top of Bitcoin security. The innovation ecosystem around Bitcoin continues to expand.
Those network effects are crucial. Looking ahead, where do each of you see Bitcoin heading in the next 5-10 years? Jordan, from a technical standpoint, what developments are you most excited about? Sam, what practical changes do you anticipate? And Maya, now that you've heard all of this, what questions does it raise for you about Bitcoin's future?
Technically, I'm excited about improvements in privacy with technologies like Taproot, scalability solutions beyond Lightning, and the maturation of sidechains. We're also seeing interesting work on making Bitcoin more accessible through better user interfaces and educational tools. The core protocol will likely remain stable, but the application layer will continue to innovate dramatically. Practically, I expect to see much broader integration into traditional finance. We're already seeing Bitcoin ETFs, and I anticipate more retirement accounts and banking products incorporating Bitcoin. The user experience will continue to improve, making it easier for non-technical people to use Bitcoin securely. Most importantly, I think we'll see Bitcoin become a standard part of diversified investment portfolios worldwide. Hearing all this makes me think about how Bitcoin could impact everyday life. Will it become something people use without even thinking about it, like email or smartphones? And what about the regulatory challenges? How do we balance innovation with consumer protection? These seem like the big questions for Bitcoin's future adoption.
Those are exactly the right questions, Maya. The regulatory landscape will be crucial, and we're already seeing more thoughtful frameworks emerging. The key will be preserving Bitcoin's core properties while ensuring consumer safety. Jordan, Sam, any final thoughts on what newcomers should focus on as they start their Bitcoin journey?
Focus on understanding the fundamentals first. What makes Bitcoin unique, technically and economically? Don't get distracted by short-term price movements. Learn proper security practices before acquiring significant amounts. And remember that Bitcoin is a long-term technology, not a get-rich-quick scheme. The most successful Bitcoin users are those who understand and believe in the underlying principles.
I'd emphasize starting small and learning by doing. Buy a small amount, practice moving it to your own wallet, test your backup procedures. The hands-on experience is invaluable. And connect with the community. There are amazing educational resources and supportive groups where you can learn from others' experiences. Bitcoin is as much about the community as it is about the technology. Excellent advice from both of you. Maya, I hope this discussion has given you a comprehensive understanding of Bitcoin from multiple perspectives. Remember that Bitcoin represents a fundamental shift in how we think about money, value, and trust. It's a journey of learning that never really ends. Thank you, Jordan and Sam, for sharing your incredible insights, and thank you, Maya, for asking such thoughtful questions. Until next time on Bitcoin Deep Dive.
Thank you all so much. This has been incredibly enlightening. I feel like I have a much deeper understanding now, and I'm excited to continue learning. The combination of technical depth, practical experience, and philosophical context really helped everything click.